So some multiple choice questions next. These ones came from the 2021 paper 2. So let's have a look and see what we make of these. Little reminder, as if you needed reminding, the correct method to fill these in is to colour them in, not to do any of these things. I'd still love to see the paper that had those 3 wiggly lines across it. If you want to change your answer, so having done that, if you then realise it's wrong, put a cross through it. If you then decide, actually, no, that was right, I need to go back to it, put a circle around it. Okay, so question 1, a manufacturer employs 1 factory supervisor for every 5 factory workers. Which best describes the cost of the factory supervisor's salaries? Without even looking at the answer, let's just think about what that might mean. So in terms of the cost of the factory supervisor's salary, they're an indirect cost. These supervisors are not directly involved making units of output, and they are going to be a stepped fixed cost, because every time we get 5 extra factory workers, we need another supervisor. So the correct answer is that they're going to be indirect and they're going to be stepped fixed. So the answer there is C. So we'll colour that one in. Which is the correct formula to calculate the current ratio? Again, cover up the answer, decide what you think you would put there. So this one is current assets divided by current liabilities. That's A. Nice and straightforward. Okay, let's have a look then at the next question. Which of the following is an advantage of zero-based budgeting? So remember, zero-based is where we have to justify every item of expenditure going into the budget, unlike incremental budgeting, where we just add on a percentage for luck year on year. So an advantage of zero-based budgeting, definitely not that they're quick to prepare. It takes ages because we have to justify every element of them. I think probably, yes, it encourages managers to work together. It's not inexpensive. That's definitely not an advantage. And there isn't minimal planning, because everyone's going to need to be trained. We're going to need some system in place. So the answer there, definitely B. Okay, number 4, a manufacturer requires 9,000 labour hours and 3,000 kilos of material to produce 450 units of product L and 300 units of product M. It expects to have 7,500 labour hours and 3,500 kilos of material available. Which product should it produce first? Well, this is about a limiting factor. So if we've only got 3,500 kilos of material, or if we've got 3,500 kilos of material and we only need 3,000, that's fine. It's actually the labour hours that we're short of, because they require 9,000 labour hours and they've only got 7.5. So if you look here, they've got 3,500 kilos of materials, they only need 3,000, not a problem with that, but labour hours are in short supply. So we should choose the product with the highest contribution per labour hour. So let's have a look here. Product with the highest contribution per labour hour is B. I'm not even going to consider any of the others. Number 5, the following information is available for the sale of product D for April 2021. Budgeted sales, 3,100 units. Actual sales, 2,950 units. Budgeted sales revenue, 20,460. And actual sales revenue, 19,765. Well, we've got to work out the sales volume variance. Okay, so remember that the sales volume variance is calculated. It's the difference between the number of units, so standard quantity, what we thought we were going to produce, minus the actual quantity times the standard price. Well, the standard quantity was 3,100 units. The actual quantity, 2,950. So we're 150 units down, so it's going to be an adverse variance, but we need to find the selling price. Now, the way we're going to do that is to look at the budgeted sales revenue and divide that by the budgeted sales. So I'm going to get my calculator for this one. So 20,460 divided by 3,100 units means that it's £6.60 per unit. That's the selling price. Okay, so £6.60 times the shortfall, so 3,100 minus 2,950 is 150 fewer units, because that's the standard, that's what we plan to sell, that's what we did sell, and we've lost £6.60, so it's £990 adverse. So remember, if you do it this way around, you'll get a positive figure in your calculator, because it's a sales variance, that is an adverse variance. So generally, if we're doing expenditure variances and we do it this way around, standard minus actual, we'll end up with a negative in our calculator when it's adverse. Okay, but just think through the logic. We've sold fewer units than we planned, so it has to be adverse, and we've lost the selling price that we planned. So sales volume variance is always based on the standard price. Right, let's march on to number 6, which is the correct formula to calculate the rate of inventory turnover in days. So this is the one where we want our average inventory divided by cost of sales times 365. Now, all of these are times 365. They haven't tried to fool us with any percentages, but it's average inventory over cost of sales times 365. So the answer is indeed A. And again, I'm not going to consider any of those because we found the right one to start with. Okay, more variances then. They like these, don't they? The following information is available for product K for May 2021. Standard material usage per unit, 1.5 kilos. Standard material cost per kilo is £9. Actual production, 4,500 units. And the material usage variance, £900 adverse. How many kilos of material were used in May 2021? Okay, so what we've got to do then, if the material usage variance was adverse, let's find out how many kilos more than the standard we use. So if we divide that, £900 divided by the standard cost, so 900, again, I don't know why I'm using my calculator, is 100 kilos more than the standard. That's what the adverse variance means. We've used more material than the standard. Let's find what the standard was. 1.5 kilos times the actual production, 4,500 units. So it's 1.5 times 4,500. That was the standard quantity for actual production. So if we add 6,750 plus 100, we've actually used 6,850 kilos. So for number 7, the answer is C. Okay, 3 more to go. Let's have a look at number 8. Gross profit margin of a business has decreased. Which of the following could have caused this change? Well, if the gross profit margin has gone down, we've either reduced selling price or we've increased cost of sales, or a mixture, excuse me, a mixture of the two. So anything that has caused cost of sales to increase, and we're looking at carriage inwards here, and carriage outwards. Carriage outwards is going to be irrelevant. That's an expense. So that's based on sales, and it goes in overheads. But carriage inwards is part of cost of sales. So if we've seen an increase in carriage inwards, that could have caused our decrease in gross profit margin. So the answer there for number 8 is going to be B. Which is never a responsibility of a management accountant within a business. External audit. Well, external audit is the responsibility of the external auditors, so it's clearly going to be that one. But let's just check the others. Internal audit, well, that could be a responsibility. Monitoring budgets, most definitely. Preparing budgets, most definitely. So the answer, external audit, is nothing to do with any of the accountants, financial management or otherwise within the business. Which of the following is not true for a public limited company? Well, it can offer shares to the general public. That's the whole point of it being a PLC. It is most definitely a separate legal entity like any other company. It does need a minimum allotted share capital of £50,000, but it doesn't need a minimum of 1 director. That is the wrong answer. It needs, I think, at least 2. I might be wrong there. Anyway, hopefully that's given you an idea of how to tackle these tricky little multiple choice questions. Don't forget to like and subscribe if you've enjoyed the video. Thanks for watching.